Most business owners hand their accountant a pile of documents at the end of the year and they hope for the best. But guess what? The IRS doesn't accept hope as documentation. What's up, guys? Mike back at it again from Ledgerly. By the hat, you know it as always. Hiding that thick, bald head of mine. Back at it again. It's compliance season, baby. Let's make sure that your books are in order from last year and also that you're in compliant going forward as a hardworking business owner that you are. So make sure you hit that subscribe button and make sure you stay tuned for more videos like this one today. Let's zoom out. You know who you are. Every year, business owners, freelancers, contractors, side hustlers send tax preparers incomplete, mismatched spreadsheets, screenshots, messy QuickBooks, things that haven't been touched in months. And then they're so surprised when you have a hefty tax bill or you go to your accountant, you're like, you missed this deduction, you missed that deduction. What do you think we are? Waving our little magic wands and coming up with poof deductions? No, that would be fraud. So this video is for you sole proprietors, single member LLCs, business owners who don't know exactly what their accountant needs when it comes to your small business. Now, full disclosure, we're talking about Schedule C business owners. Maybe you're just starting off, you're making some income, your bottom line is profitable, but you're not ready to take that next step to an S corporation, maybe a C corporation if it makes sense for you. But bottom line, this video is very transferable over to S corporation and other business owners, partnerships. It's the exact same things when it comes to documentation and income and expense tracking. So again, it's Q1, it's compliance season. No, we're not talking about the Augusta rule and oil and gas and solo 401ks today. No, we are setting the table. We're setting the foundation. We're going back to the fundamentals of the ball game, and that is our books and what our accountant needs when it comes to tax season. So let's dissect the problems here. Number one common misconception is most people think that the tax filing is all about the forms. Oh, the more forms I have, the more complicated my return is. Yeah, that might be true, but really it's about the data behind it, those numbers. I said it before, say it again. The tax return is like a piece of art, and you're only as good as the paint and the painter perfecting that piece of art. So let's make sure that we're actually putting valuable paint, good paint. We don't want that lead-based paint. We want that good paint. I really don't know paint. I know Bob Ross is a big painter. That's all I know, and he's got way more hair than I do. But don't worry, I'm an accountant, not a painter, so we're going to be painting a picture of your problems when it comes to your small business and your record keeping and exactly what your CPA needs. But problem number one is that the numbers don't match the books. And what do we mean by this? Meaning, if you have a QuickBooks report that you're giving to your accountant, but then you have other documentation and stuff that's supposed to be tying back to that report and it doesn't match, your accountant is going to jack up your fee because they have a mess that they now have to clean up with you. So remember, we're looking for our total business income and our total business expenses. So problem number one is having books that don't even tie to anything. We got to make sure that our books are tying to something. Number two is the risk of missing documentation and missing deductions. Guess what? The IRS only cares about those 1099s that are in your name or your business's name. If you have spend and you're swiping your credit card and paying for things, we need to make sure that those things that you're paying for that are ordinary and necessary in your business to produce revenue are documented and you have backup within your QuickBooks, making sure that there are receipts and transactions that actually back up that documentation. Problem number three, probably the biggest one is, and we said it in the first video from this series, not separating your business and personal. Biz and personal. Your accountant ain't going to go through your personal statements and say, that's business, or better yet, here's my favorite one. You're going to give them your personal bank statements with 5 different highlighted colors and highlight this one green, highlight this one yellow, this is pink, this is gas, this is materials, I know people that do that, and it's very inefficient, a waste of time for you as the business owner, and a waste of time for the accountant, because now we have to manually tally them up, nightmare. And your accountant can't just wave that magic wand and go, poof, that's your deduction. No, there's got to be substance behind it. Substance over form, right? And then problem number 4 is, again, there's no buyout. There's no year-end reconciliation. There's no year-end close and process. So, Mike, how can we fix this? Can you give us the keys to the kingdom? Can you lead us to water? Well, yeah, why not? I'm a nice guy. What's the framework? What's the strategy? How can we fix these problems here? Well, The first thing, let's actually get some financial reports. Let's actually keep up with a monthly balance sheet and profit and loss. Well, Mike, what's a balance sheet? What's a profit and loss? Okay, well, your balance sheet is what you own, things that you have on hand that you could sell or liquidate for cash. Your cash, receivables, inventory, fixed assets, the list goes on. How about what you owe, like your payables, your accrued expenses, your loans, your debt? That's what you owe. The difference of that is your equity. What's your value in the company? What's your basis in the company? Now, when it comes to your Schedule C, this is where it's different than a corporation return, because the Schedule C, as we're going to get to, is only the profit and loss. It's only the income and the expenses. Your profit and loss is what you brought in, loss, what you paid out, income expenses equals your net income. Then your net income rolls into your balance sheet under your retained earnings, which is in your equity section. For the Schedule C, you only need that P&L. There is no balance sheet. However, that's not an excuse to not keep a balance sheet on hand, because what if we convert to an S corporation? You bet your top bottom dollar, whatever that saying is that you need a balance sheet for your S corporation return. But the Schedule C is the profit and loss. That's it. It's also way more likely to get audited if you become a larger business in your Schedule C, because there's more activity without substance from the balance sheet that's getting reported on your Schedule C. That was a lot of talking really quick. Number 2, our framework. Make sure we are doing reconciliations. This is where people fail. They come up with their balance sheet and their profit and loss. Where are those numbers coming from? What does our bank statement say? What does our credit card say? What do our loans say? How about our fixed assets? Is there a fixed asset software? How about our merchant accounts, our Shopify, Venmo? Do we have 1099Ks? Can we tie those into our income? Make sure we're reconciling items line by line. Number 3, these are the off the book items, as you might say. These are those personal expenses that are business related. The accountable plan, if you will. Our auto plus home office. Make sure we're tracking this outside of your books, outside of your business QuickBooks, to make sure we can take those reimbursable expenses in your business. Again, we're not going over strategy, so I'm not going into detail on how to track that. We're going over the compliance, which is things to keep in mind. Then we jump into the strategy. Let's hit those base hits. Let's pay off that debt before we're swinging for the fences and talking accountable plan, Augusta rule, board of advisors, and all that fun stuff. So you know what? Let's actually go through a Schedule C. Let's bring it up. This is a Schedule C. We're going line by line here. The profit or loss from business. All right, this is awesome. I got our Schedule C up here on our whiteboard. Let's walk through the Schedule C, then let's go through a actual real life case study here. So first of all, Schedule C, what is it? It is a profit and loss from your business. Again, like we talked about up here, Schedule C is only your profit and loss. However, that doesn't give you an excuse to not keep track of a balance sheet. So we have our name, Joe Schmo. We're going to have Joe's social security number here. We're going to have exactly what Joe is doing. Let's say he's also a CPA. We'd enter his NAICS code here. That's actually the code of what your business does. And then business name, Schmo LLC. Call it that. He's most likely going to have an EIN number that he registered with the IRS over here. He's going to have his business address. Now, the accounting method, cash or accrual or other, most small businesses are cash, meaning that they recognize income and expenses when the money comes in and the money's paid out. Or accrual is when revenue is earned, even though it hasn't been paid, you have receivables, or when the expense is incurred, you have payables. So when you have receivables and payables, that's when we have the accrual method. Most small business owners are going to be cash basis. Then you got some check boxes here. Did you materially participate in the operation? Most of the time, yes. If it's no, then we have our hobby loss rules that might kick into play. Hobby loss is another topic that we're not talking about right now. Did you start the business during the year? Did you make any payments that would require 1099s like subcontractors? Let's say yes. And did you file those 1099s? If you said yes and then no, that's literally putting yourself at risk for a IRS notice there. All right. So now going down the line, our income. We have our gross receipts minus our returns or allowances, minus our cost of goods sold is our gross profit. Any other income, this gives you our gross income. So for simplicity, let's say Joe is a service-based business. Let's say his firm brought in $205,000 during the year. Let's say he had $5,000 of client refunds. That means his total income is going to be $200,000. Total gross income. And when someone says, hey, I made this much in my business, is that gross or net? Oh, that's gross. Well, what about your expenses? Because we can't do insightful tax planning without knowing your bottom line, people. So now going down the line, did Joe do any advertising expenses this year? Advertising and marketing. How about his auto? Is he tracking his auto in his accountable plan? Did he pay any commissions or fees? Any contract labor? See instructions. That's where the 1099s come into play. Did he have any depletion? Did he have any depreciation? Did he put any furnitures and fixtures in his office? Did he have any employee benefit programs for any employees that he may or may not have? Now, how about insurance, like property casualty, E&O insurance, cyber insurance, not health insurance? That goes somewhere else, not on the Schedule C. How about interest? Did he have any loans in his business? Did he have any interest expense? How about a mortgage? I probably don't want to have my mortgage in my single member LLC. I want to have my mortgage in another holding company. How about legal and professional services? Did he have to consult an attorney for malpractice for screwing up someone's return? How about office expenses, pens, pencils, chairs, desks? How about a pension? Does he have a pension plan for himself or his employees? Is he renting? Is he leasing? Is he leasing any computers or equipment? Repairs, maintenance, supplies, travel, meals, the list goes on, wages. What I'm trying to get at here is our Schedule C is our template for you business owners that are tracking your income and expenses. Heck, you can set up a QuickBooks and start with the Schedule C line 8 through 27, because other expenses, if they're not here, don't worry, those still go below the line, and we itemize those down here for other expenses like taxes and licenses, maybe software, maybe professional fees other than legal and professional. The sky's the limit. How about merchant fees? This other expense line item doesn't close the door. Everything, it's not just going to be lumped into other expense. No, we're going to itemize exactly what it is. So the rule of thumb is we want to use our Schedule C as our foundation for our chart of accounts for our business. We can literally take the Schedule C, plop it into our chart of accounts for our QuickBooks, and then bang, we have a profit and loss that is ready for a tax return. Kind of cool, right? So let's say after all said and done, we come back up here, we tally up all these expenses, we tally up all these expenses. He has, a bunch of expenses down here. We tally up those. So then we come back over here and let's say, all right, Joe Schmo, what were your total expenses this year? All right, well, let's say he had $100,000 in total expenses. Then that means his tentative profit, 200,000 minus 100,000, it's going to be $100,000 in taxable income. Now, this is a really bad example by me because if he's making $100,000, there's no way in what that he's going to be on a Schedule C. We would want to convert him to an S corporation. But again, for all you watching this video and potential people and influencers out there that are like, oh yeah, Mike from Ledgerly is totally wrong. He should definitely be a S corporation. Yes, I know this example is a bad example. I'm just doing it for literally educational purposes, but yes, this guy should be an S corporation if he's reporting $100,000 in profit. I digress, informational only. Now, the other piece here is his home office. If he's doing the simplified method or the actual method, again, not going into the strategy, that's also going to come in here. So let's say he has a home office deduction of, call it $5,000, then his taxable profit is going to be $95,000. Okay. Now on page 2, we're not going to go too much in depth, but for cost of goods sold, hey, this is for you people selling product on Shopify. When we're talking cost of goods sold, you're selling a good primarily. So you're going to have inventory, purchases, cost of labor, material supplies, other costs, inventory at the end of the year, and then that gives us our cost of goods sold here, which gets plopped up here. So then the other thing as well is for our vehicles, information for our vehicle for auto mileage, that also gets tracked here with some questions. And this goes up here, line 9 right there. So this is the Schedule C in a nutshell for everyone. Rule of thumb here is use the Schedule C to your advantage as a business owner, because you can literally crack the code and take the accounts from the Schedule C, plop it into your QuickBooks, and you have a nice ready chart of accounts to start growing and operating your business. So I'm in the season of giving here. So let me give you guys a nice checklist of what you need as a Schedule C business owner to hand deliver to your accountant. So here's your Schedule C preparation checklist. You're going to deliver your accountant a reconciled profit and loss and balance sheet. You're going to provide all the December financial statements. You're going to be submitting a mileage log and home office details to take advantage of what we talked about above in our Schedule C. You're going to provide an asset list with purchase dates. Asset list, what was that again? That's our depreciation line item up here. You're going to deliver receipts. No, not a shoebox or banker's box full of receipts that have no purpose in life. No, the receipts that actually substantiate larger ticket purchases. You're going to make sure, rule of thumb, business, personal, separate. Do not pierce that corporate veil. You'll lose in court. Give your accountant a summary. How did the business do this year? What are the goals? We don't want to just prepare your return. We want to look at your financial outlook in life and how the business is going to be operating. Confirm the balances, tick and tie, reconcile. And guess what? If you hand this over to your accountant, they're going to be a happy person. They're going to love you as a client. And they're going to want to go above and beyond to help you. If the phone rings and it's you, they're going to send you the voicemail if you're a messy client. They're not going to care because you don't care. If you're on the ball, making sure you're being organized and understand not just how the accounting, the balance sheet, and the profit and loss works. No, that's up to us to do. But if you are able to substantiate clean financial records, then that's a win in our book. So if you actually want a team that's going to use your bookkeeping to find opportunities and not just file your tax return, then make sure you get a consultation on the books with us, a bookkeeping cleanup, to understand what your accountant actually needs. Not what you want, but what we need. And make sure you subscribe. Stay tuned for more compliance videos in Q1, where we're going to be walking through the right way to set up your first QuickBooks account. We'll see you in there.